Hey there, welcome to the channel. So, hey, it's the weekend, it's Saturday, and Bitcoin is crashing. All right, so this is the good thing about Bitcoin is this trades all the time, 7 days a week apparently. So here we are on Saturday, the 18th of June, and man, racked up 9.59% drop in Bitcoin, at least at this time, which is approximately, call it 5 o'clock Pacific time on Saturday. So yeah, so interesting. So, you've had your Bitcoin just getting the crap kicked out of it, and it's continuing to get the crap kicked out of it on the weekend. Very, very interesting. Let's look at this at the weekly. Yeah, and we see here that we have the issue with, no support down till 10,000, 12,000, something like that. So it's just extending. And it's really interesting too, because we have just a bunch of, appears to be a bunch of volume there. Now, of course, on this chart, I don't know if it's as accurate as other charts with the volume and all that stuff, but I mean, that's what we see. So yeah, Bitcoin getting the crap kicked out of it, not good. Now, I want to go over one other thing. Is I kind of was trying to follow through. Meet Kevin did a video last week, I think, about staked ETH. Yeah, staked ETH, which is staked Ethereum. And I wanted to just run through the numbers to try to understand it myself. All right, so what I did is I created a spreadsheet here. So the idea is that there's companies like apparently like Lido and other companies where what you can do is you can take your Ethereum, ETH, and you can just exchange it for something called staked Ethereum. And then what happens is with this staked Ethereum, you can basically put that up as collateral, and you can actually apparently earn some money on it as well as put it up as collateral. And so what you can do is yield farming on this. So one of the key elements of this, though, is that your pricing of Ethereum and your staked Ethereum, they ideally and really should be the same, meaning that, look, if you have the piece of paper, so the idea is you take your Ethereum, you go to something like Celsius or whatever, and you donate, you give your Ethereum, and then you get staked Ethereum from Lido, right? So you go to Lido to do this. Then when you have that staked Ethereum, that you can go out and actually use that to get credit. You can deposit at places and get loans against that staked Ethereum. Now, this all works fine and dandy as long as the staked Ethereum price, the price that you get for it when you go to sell it to get your Ethereum back, matches the Ethereum. But what's been happening lately is we can look at last week that we had about a 5% discount, meaning that you're at that time last week, your Ethereum was 1,110, but your staked was only 1,050. So that's about a 5% discount. Now, I just checked today, and it's interesting, the discount has gotten worse. So there's two effects going on here. Not only does it appear that, we know that Ethereum, along with Bitcoin, and all the major cryptos are going down. So on one hand, they're going down. But in addition, the discount of staked Ethereum to Ethereum is actually increasing. So this window is opening up. And so the problem is that if you have your staked Ethereum and you need to return Ethereum to someone, you're getting less and less for your staked Ethereum. And so therefore, this can have, a difficult effect on things. So we're going to try to run through this example. The example is basically, if you go to like Celsius and stuff, they're saying, hey, you can deposit your crypto with us and we'll give you a return on that. So I saw things like 7 to 17% on your Ethereum. So let's take a hypothetical example. So let's say 8 companies, you give them 100,000 ETH. Okay. And so, they give you 100,000 ETH, they change it into a staked Ethereum. So let's say they take your $100,000. Right. And what they're doing is they're taking with your $100,000, they're promising you that 7 to 17%. Well, how are they going to get it? Even now, yields are 3% on the 10-year treasury. So what they can do is apparently they can take this and they can deposit it for stable coins or something and get like a 4% yield. And then because it's staked Ethereum, what they can do is they can actually get a loan against it. So for example, here they get a 50% loan. Now they keep going through this process and getting new loans out against it. And the result of that is that if you took a look at it and said, if everything is fine, So they do it to a point where you have this much money outstanding. So in this particular example, which is this hypothetical, you had got nearly $200,000 out in loans extended, right? So you had original 100,000, you leverage that up to nearly $200,000. But the result is, if everything goes to plan, then you're going to earn a yield of $11,750. Now, if the discount for staked Ethereum is there's no discount, then this all works well. It's like, hey, you want to return your money to the person that person gave you. Let's say, for example, you were Celsius. The person gave you $100,000, and then you did this with the $100,000. Okay, well, if staked Ethereum, there's no discount, then you get 196,000 back. You earned, based on all the money in the loaning, the leveraging up you did on that in a year. So let's assume it's 1 year of time. You earned 11,700. So total back is 208,000. And therefore you net, after you pay back all the outstanding, including the person, then you've yield 11.8% on that money. Okay. Now what happens is that's the overall yield, but then you can pay the customer, you can pay them what you promised. So for example, if you paid them 7%, something like that, then you can see that you have room to pay the customer like 7%, right? And then you would be left with the net 3.8% on the money. So we can see how that works as long as these two guys are trading equal with each other. Now, I'll be honest, I don't quite understand some of the details of this, but I got to just take it on face value. And I do know that they're doing something. I just went to the website today, and they're still promising you that they'll give you this return. So they got to be doing something. And I know just from the history of this kind of thing, someone's doing some serious leveraging up on this. I mean, the banks did it. It's just like, this is what's happening. So look, last week at 5.6% discount, what happens is, as you go to unwind these, you're unwinding them through staked Ether, right? So the problem is you're getting less money back because it's at a discount. So now you only got 185,000 back. You still, let's assume you still got the regular profit back, okay, when you go to close it. But the thing is, because the principal amount went down because of the discount, now you only netted $555. And now what do you have to pay the customer? Well, you don't have anything left. You're losing money. You may very well not have enough money to actually pay the customer back. You actually don't have enough Ether. You go and you unwind all these loans, you take all these things back, and you unwind them through Ether, and you can't get back. And then even now at today's discount is almost at 9%. You're losing money on your principal. You are in deep doggy poo-poo. So look, understand this is hypothetical. We have to be very careful. It's hypothetical. If they're using some kind of plan like this, where they're taking the money and they're using the staked Ether, Ethereum to get loans out to go invest in more staked Ethereum. If they're doing that kind of thing, and then there's a discount. Now, why would there be a discount? Okay, so what's the problem here? Well, the problem is that, this particular company that you're going through, they're the ones that took in the Ethereum, and they gave you the staked Ethereum, and they're supposed to match, right? And so now you have two things out there. You have Ethereum trading and you have staked Ethereum. But the problem is that there's so much pressure on all the cryptos together. You have this implosion on all in cryptos. I mean, they're just going, I don't know, down 30%, 40% this year across the board. So what's most likely happening is people are like, hey, look, I want a crypto. I want out of this thing. So what are they doing? They must be going back to these people and saying, hey, dude, I want my 100,000 Ethereum. I want this thing out. So they go to Celsius and say, I want this out. Okay, Celsius is like, okay, well, I don't have your 100,000. I have 100,000 staked Ethereum, right? So they're going and try to unwind it. Now, what must be happening is that there's so many people trying to unwind that they're not able to unwind it through the company that's providing the staked Ethereum. So they're not able to unwind it all. So that's why it's trading at a discount. And what they're doing then is they're saying, hey, this is so bad that I just need to get something. So I'll sell my staked Ethereum at a 10%, near a 9% discount right now. And I'll lose 9% of my money on the transfer just to get that. I'd rather have that, that 91% back than I'm worried about it being worse, a month from now. So because of that, that's why you have this discount. So now interesting. I'm looking at this data point. It appears to be getting worse. I mean, this is just an instant in time, but you're looking at it's like, holy crap. It was 5.6%. Now the discount's up to almost 9%. So this is actually increasing the pressure on whatever companies that have a bunch of staked Ethereum out there that need to, turn in that staked Ethereum to return it to Ethereum so that they can get it back to the people they promised it to. So once again, when you go to some company and you deposit your crypto there, you deposit Ethereum, and they go take it, turn it to staked Ethereum. For you to get that $1,000, that money back in Ethereum, well, they got to dump that. If they don't have the money, they have to go undo and dump that staked Ethereum. And this discount shows you that there's an issue right now. It shows you. And in addition, as a data point as today, this is an even bigger issue. So I'm just wonderfully glad that crypto changes, apparently trades 24 hours a day, 7 days a week. So you can watch the market crash on the weekends. Unbelievable.